Assalamualaikum and good morning everyone. Today my group will discuss about saving Takaful plan in Malaysia, a case study of Etiqa Berhad. This presentation focused on the role of Etiqa as one of the leading Takaful providers in Malaysia, particularly in offering saving-based Takaful plans that are Sharia compliant and beneficial for long-term financial planning. Takaful is an Islamic alternative to conventional insurance based on mutual assistance, cooperation and shared responsibility. Unlike conventional insurance, Takaful avoid prohibited elements such as riba, gharar and maisir. Family Takaful not only provides financial protection but also encourage long-term savings and investment for future needs such as education, retirement and family security. In Malaysia, the Takaful industry is regulated under the Islamic Financial Services Act 2013 and supervised by Bank Negara Malaysia to ensure Sharia compliance and financial stability. The objective of this study is to analyse the saving Takaful plans offered by Etiqa Berhad and understand their benefits and effectiveness compared to conventional life insurance product. Thank you. Next, I would like to pass the next presenter for more detailed explanations.
Assalamualaikum and good day everyone. Next, I will explain the background of Etiqa Takaful Berhad and the overview of the selected saving Takaful plans. Etiqa Takaful Berhad is one of the leading Takaful operators in Malaysia and it operates under the Maybank Group. The companies offer various Takaful products such as medical Takaful, education Takaful, retirement Takaful, investment-linked Takaful, and saving Takaful plans. Etiqa is also well known for its digital service, including the Etiqa Plus applications, which allow customers to manage certificates and submit claims online. This demonstrates the digital transformation of the Takaful industry in Malaysia. The selected product in this case study is the saving Takaful plans offered by Etiqa. A saving Takaful plans combine financial protections and long-term savings under a Sharia compliance system. Participants contribute periodically and the contribution is divided into two components, namely the Participant Risk Funds or PRF and the Participant Investment Funds or PIF. The PRF is used to provide mutual financial assistance and protections coverage, while the PIF functions as savings and investment for participants. The plans provide several benefits such as death and disability protections, hibah, nominations, partial withdrawal facilities and long-term financial planning opportunities. Among the main advantages of saving Takaful are Sharia compliance, ethical investment practice, surplus sharing, and the combinations of saving with financial protection. Unlike conventional insurance, Takaful emphasizes mutual cooperation, fairness, and shared responsibility among participants. Thank you.
Assalamualaikum and good day everyone. Today I will briefly explain the differences between conventional insurance and Takaful and as well as the main operational models used in Takaful. Conventional insurance operates on a risk transfer principle where the insured transfer financial risk to the insurance company in exchange for premium payments. It is generally profit-oriented and may involve elements such as riba, gharar and maisir. In contrast, Takaful is based on risk sharing and mutual cooperation, also known as ta'awun. Participants contribute into a common fund through a concept called tabaruk, which means donations. The aim is to help each other in times of loss and the system is fully Sharia compliant. Next, there are several operational models in Takaful. The Wakalah model is where the operator acts as an agent managing the fund and earns a Wakalah fee. The Mudharabah model is based on profit sharing between participants and the operator. Some companies such as Etiqa Takaful Berhad use a hybrid model which combines both Wakalah and Mudharabah concepts. In addition, Takaful ensures transparency through the separations of funds between participants and operators. The Wakalah fee is usually around 28 to 32% of contributions and any surplus is shared fairly among participants under Sharia governance. In conclusion, Takaful is more ethical and cooperative system compared to conventional insurance because it emphasizes fairness, transparency and Sharia compliance. And that's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Rabiatul Adawiyah and I will be discussing about the Sharia compliance framework in savings plan Takaful offered by the Etiqa family Takaful. So first of all, the main difference that we need to know between Takaful and conventional insurance is that Takaful strictly follows Islamic law and avoids prohibited elements such as riba, gharar and maisir, or known as gambling. Meanwhile, conventional insurance is generally viewed as containing these prohibited elements because it involves uncertain compensation and interest-based investment. On the other hand, Takaful operates based on the principles of tabarruk, which means voluntary donation, and principles of ta'awun, which means mutual assistance. Participants contribute into a common fund with the intention of helping one another rather than seeking commercial profit. Although some uncertainty may exist in Takaful, it is permissible because the contract is based on charitable contribution rather than commercial exchange. This structure has unintentionally helps ensure that Takaful remains free from speculative elements. So in Malaysia, Sharia compliance is supervised by the Sharia Advisory Council or SAC of Bank Negara Malaysia, which act as the highest Sharia authority for Islamic finance. In addition, so Section 30, Subsection 1 of the Islamic Financial Service Act required Takaful operators like Etiqa Family Takaful to establish internal Sharia committee in order to monitor and ensure compliance in all operations and products. Last but not least, all participant funds must be invested exclusively in Sharia-compliant investment. This reflects the concept of Takaful and helps strengthen public confidence in the industry. Overall, we can say that Sharia compliance forms the ethical core of saving plan Takaful and distinguishes it from conventional insurance. Active risk management is important in order to help protect the Takaful fund, maintaining financial stability and protects participants' interests. One of the most important strategy is called underwriting, which refers to the process of assessing and classifying risk before approving participation into the Takaful plan. This is to make sure that the contract and contributions are strictly comply with Sharia principles and do not expose the fund to excessive risk. So the underwriting process also considers as the concept of permissible Takaful interest under Schedule 8, Paragraph 3, Subsection 6 of IFSA, where it determines whether a participant has a valid interest in the person or subject matter covered under the Takaful plan. Another important principle is utmost good faith or uberrime fide, where both participants and Takaful operators are required to disclose all material information honestly and transparently. And in terms of investment management, participant funds are invested only in Sharia-compliant investment and are diversified across different sectors to minimize financial risk. Etiqa also conducts internal Sharia audits to continuously monitor its investment-linked funds and ensure ongoing compliance with Islamic principles. As a conclusion, these risk management strategies are important in maintaining the financial sustainability, transparency, and Sharia integrity of Takaful operations.
Next, we will discuss some challenges faced by the Takaful industry. The first challenge is medical inflation, which refers to the increasing cost of healthcare and medical treatment. This puts pressure on participant risk fund or PRF that is used to pay claims. As costs continue to rise, Takaful protection may become less affordable for many people. Another challenge is excessive claim and financial strain. Since Takaful is based on principle of tabarruk or donation, too many claims can affect the stability of the fund and may force operator to increase contribution rates. And lastly, fraudulent claims are also a major issue. This includes fake medical reports, exaggerate claim, or hiding important information during the application. Fraud goes against the Sharia principle of ta'awun and amanah. In Islam, Allah prohibits taking wealth unjustly, as stated in Surah Al-Baqarah, verse 188. The last one is the case of Etiqa General Takaful Berhad against Muhammad Khairul Irman bin Muhammad Zaid and others. In this case, the participant bought a motor Takaful policy at 3:49 p.m. Even though the road accident had already happened earlier on the same day. The participant then tried to use the new policy to claim for the accident. However, the participant failed to inform Etiqa that the accident had already occurred during the application process. This was considered as a concealment of material facts and a form of fraudulent conduct. The court later declared that the policy was void and confirmed that Takaful operators have the right to reject claims when participants are dishonest or fail to disclose important information. This case shows that the importance of honesty, transparency in the Takaful system.
Now, let's look at some recommendations for the sustainability of the Takaful industry. First, Takaful operators should use digital technology such as AI and digital monitoring system to detect fraud and make claim processing faster and more efficient. Second, public awareness and financial literacy about Takaful products should be improved as awareness among the public is still relatively low. And lastly, operators should introduce more flexible and affordable contribution plan, especially for the lower income groups such as Perlindungan Tenang initiative for the B40 community. In conclusion, Takaful is a unique system based on mutual cooperation and social responsibility which make it different from conventional insurance. However, the industry still faces challenges as mentioned before. Therefore, long-term sustainability depends on technology, strong governance and honesty from both operators and participants are needed. By upholding this value, the Takaful industry can continue to benefit the society and support the well-being of Malaysians. So that's all from us. Thank you.